What's up? I just pulled up this random chart of Amazon, and I want to kind of break down my stock market researching tips and just kind of how I go about finding a new stock. So I'm not in this stock personally. This is Amazon. It's gone up gajillion% over the past 10 years. It's not really about buying this stock or what I think about it going forward, because I can't control the future. I don't know what's happening, right? So this is just kind of how I look at a stock, how I read the chart, and kind of how to decide whether I should buy or sell. Now, one share of Amazon goes for $3,300. I don't expect you guys to go put 15 G's in the stock to buy 5 shares. That's kind of ridiculous unless you have a lot of money, right? So you don't need a lot of money to buy these shares. You can buy partial shares. So 1/10 of a share will go for about $330. So you just don't get carried away. If you see an expensive stock, don't let that scare you away. You don't need to own a whole share. Okay, so the first thing you need to do when you look at a new stock is you got to make sure that it has some sort of upside. You got to make sure that you're getting a good deal on it. So I could use Tempbrakes to outsource my fundamental analysis. I definitely read about the company and I look at the PE ratios and all that other good stuff. But for the shortness of this video and to entertain you guys, I'll just give you this guy's number real quick. So $4,200, the financial analysts on Wall Street say about 26%, right? So we know that it has some sort of upside in the near future. So when I'm looking at this chart, I want to make sure that I'm getting on the right side of price movement. I want to make sure that I'm riding the uptrends and that I'm not buying into a downtrend. So to do this, I use the 20-day moving average. The 20-day moving average is that little green line you see there. I use the simple moving average, so it takes the average of the last 20 trading days and it puts it on one little line for me. So if it's below this 20-day moving average, it's a bearish downtrend. If it's above it, it's a bullish uptrend. So every time that this trend reversed, I drew a circle on there, and you can see the days following that circle what happened, right? So when the price drops below the 20, that green line, it goes down. When it goes above it, it goes into an uptrend. And this happens on every single stock, on every single chart that you possibly could look at. So this is at the core of how I do my stock investing and trading. Another valuable thing that I like to use in my trading is Gerald Peters' money flow. So he says that price moves in 4 stages. We're buying on stage 1s and 2s, and we're selling stage 3s and 4s. So on Amazon, you can look and see price goes sideways, down, sideways, up, sideways, down, sideways, up, sideways, down, sideways, up. So you got to position yourself to make the most money, right? So after a big down move, when it starts to go sideways, that's when you get in. Because coming after that, it is my belief that after a big down move, when it starts to go sideways, it's your chance to get in, to ride the up wave. And also, by knowing this, you'll never buy a stage 3 or 4. So after a big up move, when it goes sideways, you could get in, but you want to keep it small because the chances of you making a lot of money are slim, because it's my belief that after a big up move, when it goes sideways, a down move is coming. Or at least it's very unlikely that it's about to go up. So all we're really doing is using indicators and a chart that has price on it to make the most money. And one of my favorite indicators that I want to talk about really quick is the RSI, which is here at the top. So if I drew a line, anytime that price went extreme, either to the downside or the upside, you can use that to predict where price is going in the future. So you don't really know exactly what it's going to do all the time, but this gives you some insight on what you can expect the price to do. Finally, we're going over support and resistance. So it's pretty easy. You just draw where price stopped, where it couldn't go up or down anymore, where it went sideways, and you draw a line on where that's a very common occurrence. So you can do that at about $3,100 here on Amazon for our support line. And then if you go over to resistance, you can do that at about $3,600. So support and resistance is just targets, right? That's just where we expect price to go and stop and go sideways. So knowing this, $3,600 as a resistance line, I don't want to buy anywhere near that price. I want to be as close to $3,100 as I can possibly get. And if eventually I think the price is going to $4,200 with 26% upside, then I know that it's not out of this world to think that it can get to that resistance line at $3,600. So if I wanted to, I could buy some right now and sell it when it gets to $3,600, because I know it's likely to stop and go sideways, and maybe it pulls back and comes right back down, and I can do the same cycle over and over again. And that's kind of just how I trade. This is a random chart on my Amazon, so you can use this with any other stock. I've even used it with Bitcoin, right? So if you guys have any questions, let me know. I'll help you guys out, and I'll make sure I post more of these, and I'll make sure they're better too. I'm gonna get face cam and all that good stuff, new mic. So thank you for watching.